Hi, Allison. How are you?
I'm well, and yourself?
Spectacular.
That's great.
Of course, I'm not always spectacular when I say that. Some, sometimes if you say it, you'll feel that way.
That's what Zig Ziglar says.
Yep, that's right. That's right. He is correct.
He says, super good, and I'm getting better.
The idea being, if you say it enough, eventually you will be it.
Absolutely.
So, how are you tonight?
I'm doing well. I cannot complain. I'm excited about joining this webinar because every time it was on, I had Bible class or some other meeting.
Oh,
and I
gosh.
and I said, oh,
Well,
this
it's acceptable to skip us for Bible class. I have to say that.
so this time I said, oh, I can get on today.
Oh, my goodness. I did not take my 6 p.m. medication. I'm one of those people now. I have to take my 6 p.m. medication. Hi John, how are you? Chi, how are you?
Hi, I'm well. How are you?
Spectacular.
What's your 6 p.m. medication?
Well, I was in the hospital for like 8 weeks, right?
Yeah, I still don't know about what.
Well, so I was in bed one night and I woke up in the middle of the night to go to the bathroom. And turns out I was throwing an aortal abdominal blood clot embolism.
Oh my God.
Yeah, and I couldn't walk. Both my legs were shot.
What?
And
That's crazy. What is that caused by?
I mean, they say smoking, but I know a lot of people who smoke in my family who don't ever have that. I
It's
think it was the quarantine actually. Drinking excess. No, I'm not trying to be funny, but I was drinking excess coffee more than I normally would,
oh,
smoking more than I normally would. That
yeah,
kind of thing.
yeah. You're saying it's called an aortal blood
Ab-
clot?
no, an aortal abdominal embolism.
Oh,
So at 6 p.m. now, I have to take Coumadin every night, and you can't take it really. You have to take it within like 20 minutes of your time, and I'm like an hour late, and kind of
Oh, oh
sucks.
gosh.
So
You're such a rebel.
if I start throwing a blood clot, you know,
Jeez. I'm so sorry.
oh, don't be. It happens. It happens.
I'm glad you're okay.
Well, thank you. Thank you. I'm glad now you know, but before you didn't know.
Yeah. Yeah, I was like, I think I had just asked you, I said, it's not COVID, is it? You're like, no, it's not COVID. And then that's
Yeah.
all I knew.
Yeah, no, completely not the COVID.
Yeah, not the COVID. I'm looking it up right now. It looks, wow, it looks intense. Yikes. Aorta. Yeah. Anyway,
Yeah, it's not a happy place to be.
no.
Hi, Nick. How are you? Hi, Sarab. Hi, John. Everybody can talk if you have microphones.
Hey, Kathy.
How you be, Nick? I haven't seen you in so long.
I know.
And Chi, last two times we had all new people, and I even got a class out of it. I had like 4 people for a class. It was kind of cool. And then this one is people, not new people, but people I haven't seen in ages. Because Chi is here too, Nick.
Nice. Wait, which Nick? I can't see anybody's, I don't see like an attendee list. I can't see.
That is Nick. Well, I'm not going to tell you his name because we're streaming live on YouTube.
Oh, okay.
And Matt Kelly is here with us today. See, this one is weird. Like this one, we're getting all of our regulars, but the ones we haven't seen in ages and ages. Matt, do you have a microphone? If you do, you're welcome to say hello. John writes, hello, Kathy. How are you feeling these days? Glad you are better. Matthew is getting a microphone. Thank you, John. I'm so glad to be better. Believe me. It's so funny because I was very calm about the whole thing. And when I was in the ER that night, the nurse turns to me, you're very calm about this. Are you okay? I'm like, yeah, I'm fine. It's like, are you normally like this? I'm like, yeah.
Par for the course.
Yeah. Well, it never happened before, but you know, what am I going to do about it? You can't freak out. Freaking out does me no good.
Yeah, no, I meant your attitude about life.
Oh,
in-
gosh.
In a good way.
Gosh, yeah. Yes, ma'am. So everybody, if you have mics, you're welcome to speak and say hello. Indeed. It's so funny because I was actually considering I have like the world's biggest headache, so maybe you guys can help me get rid of my headache.
Hi, my name is Saj. I'm interested in hearing more. This is my second Women in Notes session. I think I joined on like a year ago, and I was trying to find back the group for a while.
Oh,
So I'm excited to be here. I'm based in New York, looking at opportunities in New York and New Jersey these days, and trying to get as much learning as I can before the next wave hits. But thank you guys so much for hosting this still. I'm so glad that it's still around and active. And I had spoken to both Kathys a little while back, and excited to hear that everyone's doing well and still actively engaged in the community.
well, we're happy that you're here with us tonight. Excellent. Very, very nice. So, hey, Imran. So how do you feel about the market there in New York? I'm sort of on the fence about it. I got to be honest.
Yeah, I mean, prices are still astronomically high right now. And it's so weird because I have someone, a family friend that came to me with short sale opportunities in Brooklyn and Queens, but she has tenants in them. So she's actually not even based in the US. She's based in the UK. So she's just been following the news to see what to do um and how to like rectify her situation. And I feel like we're constantly talking to different people that are investors and seeing. I'm reading a lot of things online about different node investors. They have different communities. But in terms of prices in New York, I mean, it's very high right now.
I
I don't
think
know if
it's
the
gonna.
bank.
I think it's gonna crash. I got to be honest. I mean,
Yeah.
you drive through Manhattan right now, or drone through Manhattan, as it were, and all the stores are boarded up, and a lot of them aren't coming back. People are
Oh yeah.
leaving. 300 people a day are leaving the city.
Where in you guys are based in Jersey, right?
Yep.
Where in Jersey are you based?
Well, we all work from our homes.
Yeah.
One of us actually does live in Staten Island. But so we have a virtual office in Piscataway, but
Okay.
none of us are in Piscataway.
Yeah, I went to a town called Pennsville over the weekend to look at an investment opportunity.
Oh God, that's like South
Yeah.
Jersey. Yeah, that's
Yeah.
like those are different people down there. Those are
Yeah, I mean, Jersey
those-
is so big.
yeah, right. It's like the size of a postage stamp.
No, it does go far. And what was really interesting was that we drove for a while, and then we heard of a few people who've been investing in Jersey for a while. So I was just trying to get a sense of like what towns and what's going on there, because it seems like there's a lot more opportunity just today versus New York. We invest primarily in Long Island in foreclosures and REOs, and would like to get more involved in notes.
Yeah, I mean, Jersey, I guess, is just like New York in terms of property values. Property values are fairly good here. I mean, look at me. I live in a two-bedroom house. It's worth, 380,000. So, they tend to be good and high. but it is New York and New Jersey. So Rob is writing actually a question to you.
Can you hear me?
Who is that? Is that Matt?
Yep.
Yes.
Just seeing if you could hear me.
Yes. Oh, I just see your question just now. I didn't realize there was a password
Okay.
on the meeting. I think that's something Zoom forced everybody to do.
I'm shocked.
Yeah, I think it's something Zoom did. In fact, a couple like weeks ago, it actually just completely and utterly changed my links. My links were invalid. I went to log in to start it and all my links were gone. I was like, what is happening? But so I think Zoom like changed things. So how are you, Matt?
Oh, busy in all the best of ways.
That's great to hear. I'm so glad to see you or, hear you. So Saj, this question is actually for you. They want to know, Sarab wants to know, and I'll entertain this for a couple minutes, even though this is not a short sale webinar, but she wants to know how to use short real estate in Queens and Brooklyn.
Well, I'm not sure if she means like shorted, or how do you
Well,
operate a
I
short?
think, yeah, I think she has it in quotes. So I don't know. How does one in quotes short real estate in Queens and Brooklyn? I'm unfamiliar because I don't do real estate, so I don't really know.
Yeah. Well, this person, she kind of is taking over for her mom, who she had originated these mortgages probably in 2008 with little money down, and just tried to operate it from far away. And they were actually not bad in terms of the amount of debt on the properties, but the tenants stopped paying a long time ago. And the issues with these were just that the tenants have not been cooperating for years, and now she's trying to rectify the situation. So one strategy that somebody had mentioned was to just see if you can talk to the bank and see how much they'll let it go for. But with the eviction moratoriums in place these days, it's been difficult for her to kind of gauge what to do with the property. We've put it out to a few investors to see like if they'll take it with the tenants in it. But that's basically the situation with these two properties. They're in good areas. They don't have a ton of debt, but they do have a bunch of violations because they haven't been able to pay the mortgage because the tenants haven't been paying for years. So it falls into similar categories as notes in a certain way because
Well,
it's a mortgage.
when you live in the blue bastion of hell, like we do, New York and New Jersey, I mean, foreclosures can be anywhere from 3 years to 12 years.
Yeah.
And it's and can get up to $25,000 very easily. So it's it's really hard, even without the moratorium on foreclosure at the moment. It is really hard to foreclose in this blue bastion of hell that we live in.
Yeah, I think I'm very curious to hear, as you guys have been veterans in this industry for a while, what do you see the industry being like in a few months? And have you heard anything from I don't know if you deal with specific banks, but do you see like a new wave of mortgages being opened up in terms of banks selling them off to smaller investors?
Oh, I think that's inevitable because
Yeah.
people are not paying their mortgage. Not a lot. I mean, there's a larger percentage of people not paying their mortgages right now. So I think that's inevitable. The question is, when are they coming out? I don't think this year. I think that would probably be a next year thing because banks tend to hold them for a little while delinquent.
Yeah.
But and then even beyond that, they'll hold, if there's equity, they'll hold them longer. They don't want to part with them as easy.
Yeah.
So I tend to think it'd be next year or the year after, but they'll inevitably be mortgages flowing from this.
I
But
see a lot of note investors selling their portfolios now, probably so they get an influx of cash and can be ready to buy when.
yeah, for sure. Sarab writes, I know buyers who do this in Queens and Brooklyn remove violations, etc., and get issues resolved. Foreclosure is a mega pain, as Kathy states. That would be true. So if you know somebody, maybe you two can connect with each other and see if you can help each other out.
Yeah, for sure. What's the best way to connect with people on this? I refresh my memory. I see there's attendees on here.
Well,
Is that-
if there, you can type questions, and by default it
Ah.
comes only to me.
Hmm.
But I think you
Okay.
can change it to go to everybody in the room.
Oh, okay, awesome. Oh, I see this now. Thank you.
You are quite welcome. So panelists are me, and then panelists and attendees are everybody.
Mm.
And by the way, everybody's using the Q&A, and I appreciate that. You're better off in the chat. That way I only have to look at one thing, and then everybody else can see what you're asking. So Matt, what do you forecast out there in California?
Just California?
Well, not just California, you're everywhere, but you know what I mean, out there on the West Coast.
Is this a state of the market question?
Do you anticipate seeing notes coming out of the current situation, and when?
Yes and no. The answer is more no, but why that is because it's not due to the current situation. It's for other reasons that there will be a flood of notes in the very, very near future. What I'm talking about is that we've been involved recently in several bond collapses. Every note you've ever purchased, every note we've ever purchased, traditionally came from mortgage-backed securities registered with the Security Exchange Commission. These, once they get downgraded to a certain point, they're able to be collapsed, broken up, and sold. These are performing notes and non-performing notes. And recently, the ones we've attempted to be involved in, they couldn't collapse the bond because essentially they couldn't sell the performing notes for what they needed to sell them to collapse the bond. And this is pretty much across the board. And that's because it's deemed that the market's too volatile and the performing notes are too risky. Keep in mind the non-performing notes that we're trying to buy, it almost doesn't even matter what we're willing to buy them for, because it doesn't even move the meter. The performing notes sell for so much, usually over 90+%, 95%. But considering right now, once the market stabilizes, and I don't mean everything goes well, I just mean becomes more predictable, we're going to see a lot of those bond collapses. And from a conversation I had with somebody last week, there's over 5,500 of them. And those are ones that are waiting to collapse. Once the market becomes a bit more predictable, they should be able to collapse them. And each of those bonds has thousands, if not tens of thousands of mortgages within them.
Mm-hmm. Yep.
So we're trying to also find alternative ways to be able to acquire those bonds and even collapse them ourselves currently.
Oh, well, that's fantastic. Sort of.
The hedge funds that have been liquidating, there's not too many of them. A lot of the really small ones have been liquidating just because it's considered on the retail side kind of peak note, and that they're getting, in many circumstances, insane prices for these notes that have not been seen have ever been seen before.
I know.
And there's a lot of reasons that happens. Some of it is just the mediocre education that many are receiving, which is just enough to make some dangerous mistakes, and not knowledge of collections, but also upcoming law changes. As you mentioned, California, there's a lot of them. I can rattle off some of them if anybody wants to look them up, but there's a lot that's ongoing.
Well,
So I see that there's going to be a flood of notes coming into the very near future. When it's going to happen is possibly starting in the fourth quarter, usually October, November, and very likely in early 2021 starting.
So it's interesting because we buy the seconds, Matt, you know that. and somebody just was trying to get 70 cents from us. We were like, are you insane? These are seconds and not even covered seconds. Why would we pay you 70 cents? But it's outrageous how much they think they can get for them. So obviously we passed on it. But
Good choice.
the Wild West has gone insane is kind of where I'm going with this.
Look, there's times in which it's genuinely worth it to pay a price along those lines. But when you're talking about seconds, which to me says a much lower balance, there's risk that's involved with anything, whether it be first or it be seconds, or quite honestly, any lien, as the possibility of litigation, extended timelines. Just there's a lot of variables taking place, and those things are taken into consideration, and it would be difficult to say that a 70% purchase price would make it worth it. And it's also a nuanced industry. So with this nuanced niche industry that requires specialized knowledge, the returns should reflect that type of investment. And what I mean by that is the return should greatly exceed other areas that one can invest in, like the stock market or anything else.
Yeah, for sure. For sure. I just, when we saw this tape, we were like, and it was a nice tape, to be perfectly frank. But then when they started talking about the price, and we're like, yeah, no, not going to happen. Sorry. But outrageous. And you're right. It is all about, I mean, not for nothing. If a note was spectacular, I'd spend 50 cents on it. Do you know what I mean? If the money was there, if the return was there. But 70 on a second, almost impossible to make your return. Not almost, definitely.
I saw a tape similar to that, Kathy. I'm wondering if it was the same one, but I think that the difference, and not that it's justified, but the difference in that I saw with that tape from others was very high arrears balances. And it seemed to me like they were trying to make some of the purchase price about the arrears rather than just the principal.
Right. And here's the problem with that. When there's really high arrears prices, that means it went delinquent a long time ago. And most states have contract law maxes, which means you can only go back 6 years, 4 years, 5 years, 3 years, whatever the contract law is generally what it falls in line with. So if something went delinquent 12 years ago and you pay your money on the arrears and you can only go back 6 years, then you're getting screwed out of 2 years of that arrears. So how is that helpful?
That's only part of the problem. Some of the other problem is, as Kathy's referencing, is all those arrears collectible? The other part is the investor in this circumstance attempting to get their returns, get their yields and everything else, saying things like, oh, we're going to recapitalize the debt. They may attempt to increase the interest rate or even keep it the same, but just increase the principal balance. One of a number of options. There's something called the clean hands doctrine. The other one's considered bad faith. And that's essentially the legal argument which may be made by the homeowner and their counsel that effectively you're screwing them, or you put them in a worse position than they were even in beforehand. And this is not even arguing usury, and they can invalidate the debt as a result in its entirety.
Mm-hmm. It's true.
What is, Matt, let me ask you this. If you have a loan with those long-term arrears on it, and there is a statute of limitations, right? If I go through foreclosure, typically when I'm filing, I have to account for the statute of limitations and lower my arrears. If I'm talking to that borrower in a more friendly case where we're trying to do a workout, what if I don't accommodate the statute of limitations and include the full arrears? Is that a violation?
Yes.
So conceivably they can come back.
The answer is yes. So
It's
there's
a
a couple
violation.
things. It's very, very state specific. An example is like the state of Arizona and Idaho and a couple other ones. They have a rolling statute of limitations, which means each payment has its own statute of limitations. So like in Arizona and Idaho, you can only collect on 6 years worth of payments. They may owe 10, 12, 20, but you can only collect upon 6. And then there's other states like California that it's basically 20 years from maturity. So if the loan matures in 2040, you better do something before, 2060. And other states, you like, let's say New York and a couple other ones, I believe offhand, it's like 5 years for a lot of them. You can waive a lot of the interest and just demand 5 years, but they may show up in court and say that, look, I haven't paid this thing in way longer than that, and do something like demand the complete payment history on the loan since origination. And if you're not able to demonstrate that they made payments, like actually made payments to put them within that statutory time limit, it's possible, and it has happened. It's a pretty rare argument, but it absolutely has happened, where they can side with the homeowner and strip the mortgage or deed of trust of their power of sale, or say that you can't foreclose.
That's right.
And that's part of the risk in taking those out of statute notes. Now, and it's also having an understanding that certain sellers, they'll just advance the date and tell you that it's some recent date, trying to get a higher price from the loan, which is where during the due diligence or underwriting part, whatever you want to call it, you get things like the payment history. And you also, and we have a couple files right now where we have seconds and they're saying that it's a line of credit, and they'll say that they never took the draw, or that they took a significantly lower draw than what is actually owed. And we're having to demonstrate in court currently that they did draw that amount.
Yeah, how do you prove that, right?
Yeah, you get the draw, you get the payment.
Right.
Matt,
That's it.
are you a
I mean,
lawyer?
there's another circumstance. One of them, they filed bankruptcy in the past. So we're also bringing that bankruptcy into it and showing like, hey, here's the lender's proof of claim then, showing the amounts owed. And that was not contested. This was accepted and paid upon for a period of time before the bankruptcy failed.
Yeah, that's important to go over the PACER documents and see what's there. There was a question for you, Matt. Matt, they want to know if you're a lawyer.
It's a joke, but it's not actually a joke. I'm not a lawyer because I don't want to take the pay cut. However, I'm very happy to cite case law, regularly provided even to our own attorneys. I have extensive amount of research and experience.
Well, and are you the owner of that company you work for, or are you a partner or something?
Technically, in a lot of companies at this point. No, the foreclosure trustee,
Yeah.
as I manage a department in there, which means that the difference between judicial and non-judicial foreclosure is the goal of non-judicial foreclosure is stay out of court. And in many states, California, Arizona, Nevada, Oregon, Washington, Texas, Idaho, Montana, and Alaska, those are all states where we process the foreclosure actions, and it's not a court action and significantly less expensive. But
It's a much happier place.
Yeah, in the event someone like Kathy and numerous other people on this call want to enforce their creditor rights in a non-judicial state that we service, we're the ones that are legally able to do it. And there's very few companies legally able to do that. But as Kathy would attest to her story as well, having experience in this realm, being the foreclosure trustee, having the knowledge and experience with title, legalities, everything involved, why the hell wouldn't I do this ourselves? Guess what? We do. We believe in this.
Yeah,
And
absolutely.
feel free to ask whatever attorney you use in the states you use them to enforce your creditor rights. Why don't they buy and own notes too? And, in honesty, they should tell you, yeah, we do.
Right. That is true. That is indeed true. And obviously, so there are states, the non-judicial states for notes are obviously more expensive because it is a much quicker foreclosure, assuming it's
Not
uncontested.
necessarily.
Well, I just said assuming it's uncontested.
No, I said that I don't think they're more expensive. The foreclosure actions are way less expensive usually.
I didn't say more expensive.
And purchasing the notes, it depends on where you're purchasing them from. If you're purchasing them from a variety of the listing websites, which let me just rattle off a few for anybody that likes those places. Exchangeloans.com, NLEX, watermarkexchange.com, MLS.com, Stackfolio, Paperstack, PAPERSTAC. They're pretty popular right now. NoteTraderExchange.com. And sometimes there's reo.zionsbank.com. Sometimes they have notes on there. Usually it's just REO properties they took back. But
You know, Matt, that people are going to ask you to type those out. Send me a list, or do you have that as a list?
it's been in my presentation for like the last year and a half.
Oh, well,
I'll send you one of my presentations and it's listed in there.
okay, because you know people are going to ask me for that.
Good. And I freely share information.
Oh, Matt is the best. He's an excellent resource. But at the same time, when you have business, toss it his way. Imran wants to know, she has a Louisiana foreclosure question. So we're not not attorneys here, but if you ask your question, we'll see what we can do to help you.
Hi, Kathy. Good to hear your voice again. And hey, Matt, I haven't seen you for a long time. Last time I saw you was in IMN in California, in Dana Point, a couple of years ago. Yeah, but good to see that you're here. I wanted to pass some information to you. I am doing a foreclosure from second position in Louisiana. We had a long battle and we fought through a statute of limitation and we had to reduce our payments and whatnot. But now we're going to do foreclosure. And in the past, I have sold those properties at auction subject to the first in Florida or in Texas. Now in Louisiana, my attorney is saying that if I do sell it, and if I end up with the property, I do have to pay the first and the sheriff. I cannot take subject to the first. First has to be paid.
Let me give you an example. Indiana. I don't know Louisiana. I haven't foreclosed on a property all the way there. But Indiana is pretty much the exact same. It's judicial, it takes forever, and nobody ever forecloses on a property in Indiana because it takes so damn long. So in Indiana, even when we're currently foreclosing on a note that's in second position and the first is performing. The homeowner contacted us and said it's all a scam. She doesn't know the money and some story we've all heard before. That's perfectly fine. There's some equity in the property. We're still happy to move forward. And what we were surprised at and explained by our attorney is that once the property goes to sale, it is sold free and clear, which means that our bid actually can include the amounts owed to the first mortgage. And what happens at the time of sales, whoever gets it free and clear. So we're not foreclosing subject to. And if we foreclose, if the credit bid is, let's say, 10,000, we have to write a check for $10,000 to the first mortgage. But then again, we owe it free and clear. Now, if the first mortgage is owed hundreds of thousands of dollars, that's still not our problem. And they can pursue the homeowner for a deficiency judgment. So that may be your circumstance right there. Now, the first can protect their interest and, bid up to the amounts that they're owed. But you also want to double check the redemption rights within that state. Like an example, Indiana, there really is no redemption rights. And the amounts that are owed is affirmed in a judgment and has already been addressed in the court. So if this thing goes to sale, the homeowner's out of luck and they really have no rights at that point. So either this property is going to revert to us for a very low amount if nobody bids on it, or if somebody bids on it, but the amounts do not exceed the amounts owed to the first mortgage, then we get nothing.
All right. So in my
And if they
situation,
exceed the amounts owed to the first, we get everything beyond that up to the amounts that were owed.
yeah. So that's the exact situation here. There is no redemption period. First is owed 275. We are owed 200 something. So I want to set, we are doing the foreclosure, so we can set the opening bid to somewhere around 475, right? And then if nobody bids, then I have to pay 275 to the first. Is that right?
Correct. So in that circumstance, there's no incentive for you, the second mortgage, to place a sincerely high bid. Because if that happens, you have to cut a massive check to the first mortgage.
What would you do?
Well, work with your attorney, because these counties are all different. Sometimes you can do what's called a low high bid, where you have an opening bid amount and then the auctioneer automatically increases your bid by increments specified by yourself. But that's not always possible. In some of these counties, they're just, hey, your bid is what it is. It's either above it or not. This may be one of the circumstances, depending on your equity position, you may want to go down there and let them know that you'll be down there and actually bid, in person, or have somebody show up on your behalf, which is not the easiest thing to do, but it's possible.
Yeah, the property is listed.
These are not great. These are not great scenarios, because you may have to show up with a sizable amount of cash, and you also need to look at who the first happens to be and whether or not they may or may not actually show up to the sale.
Yeah, the property is currently listed for sale for about $600,000. So there is equity, and the first is with the servicing company is SLS. I was thinking to reach out to them to see if I could try to buy their position.
You won't.
Yeah,
You
they
won't.
won't talk to you. Yep.
You don't have the right to talk to them about anything along those lines. One, you have the right to bring the loan current and to pay it off. Any other conversation is not considered a right. Next of which is that loan is likely pooled up with a lot of other loans. And if they were to pull that one loan out, it would compromise the integrity of the pool in which it was securitized by. And they legally cannot do that. And the other thing to take into consideration that's harder to explain, but banks really can't take a loss on loans like they just sell it at a discount for shits and giggles, because keep in mind, they have a fiduciary duty. So they generally can't take a discount on a note.
I see. So, yeah, and I have spent a lot of money on legal, so I do have to.
Yeah, my personal suggestion on that one scenario, which we're not going to go over, one-off scenarios too much, but on that one, you're worrying about things that haven't happened yet. Just move forward and cross that bridge when you get there. Because you said there's equity in the properties for sale. Chances are you're not going to get the property to go to foreclosure sale. They're going to file bankruptcy. They're going to try to work something out with you or do anything other than lose the property.
Yeah, they have gone through bankruptcy before. I just want to get paid. I don't want the property.
Yeah, that's why we're in this business. I understand.
Yeah.
I assume you're not doing it to make friends.
So I'm planning to set the opening bid to cover first and my position, and see what happens.
Good luck.
Thank you.
Wow, this is a good conversation. Anybody else have questions?
I have questions. What would you say, like, to someone who's trying to get started in the industry but feels like they're overwhelmed with the amount of information? Like, to be quite frank, I'm based in New York and New Jersey, which are, it's very difficult to foreclose in these states. Would you say, like, let's say I started out with $10,000 or $20,000 and I can raise money from people around me to do something bigger, obviously. there's also been investors that have approached us to do things, but they don't fully understand, and I don't feel like I'm equipped to really give that information. What's the best way to get started? Is it like buy one or two notes, see what it's like, and move from there into bigger circles? Is it to
Just know that Kathy and I are going to disagree on this one, so I'm going to let Kathy go first.
I always tell people, I'm not going to tell you who to buy from or wherever. As far as getting started, the way I got started is I didn't go to any training or anything. I literally bought notes and learned.
Mhm.
Having said that, you need to decide how you learn best. Do you learn best by doing, by your own like potential failures and maybe being scared to lose some money? Or do you learn better by getting some education? So you need to decide that for you. What were you saying, Matt? I wasn't gonna say anything.
Like I said, we're going to disagree, but it's like I said, it's all based out of love.
Yeah.
So where Kathy and I differentiate on this is I do not recommend at all in under any scenario just blindly buy, and that's where you're going to learn. If one were to do that, you might learn, let's say, one lesson, and that's learning the hard way and possibly a very expensive way,
Right.
especially with such low capital amounts, which is not knocking $10,000 to $25,000. That's a lot of money to me. Always has been, always will be. I don't care how big my bank account is. That always will be a lot of money. So what I do recommend is first and foremost getting what's referred to as a dummy list. And there's a lot of places one can sign up to get lists and offers of notes. I didn't say they're great opportunities, but they are free and they don't care if you never, ever, ever buy. And what takes place is you can start underwriting these assets. And in doing so, it's kind of playing without having to pay. And that's seeing if you can determine what's good and what's bad. And then once you've done that, and this is all absolutely free of charge, so either they have the information in which one will need to underwrite it, or it's freely available, as in you can find it online somewhere. And in doing this, even with very little background, you'll start discovering what's referenced as gaps in your due diligence or gaps in your underwriting. And you'll start seeing if you don't know that much about bankruptcy, or you're missing things on title, or you didn't catch something in the homeowner's background that could possibly be relevant. And you compare notes with somebody else that you respect, their opinion on these things. And generally speaking, like they were talking about a tape earlier, notice how many people already knew of the exact same tape. Well, they all did the same research on it. So if you were to ask them about it, they can probably tell you what they already did, what they found, compare it to your notes. You'll learn about pricing. You'll learn about estimating returns and yields, the most probable outcome, and again, the various different parts that's involved with underwriting something like a note versus real property. So it's doing a dry run. After you do this, you can even follow up with the people that did buy the note a month or two later and see how they did, and if you were right on your predictions. And quite honestly, after doing this for a couple months, once you're done kicking yourself, you'll either be ready to go, or when you may encounter a deal that you think is so spectacular that you can't resist but doing it. Because these are things that are not usually done when it's, oh, I might get a 10-15% return within this time frame. No, these are things that are, oh my God, this seems amazing. That's when you should do it. And if it's anything short of amazing, quite honestly, don't do it. Education is the quick, easy way to do it. There's some decent programs that are out there. I'll put my email in the comments, and I'll send some presentations I've done that have lists of different education programs that are out there that range from free to ungodly expensive.
Do you list me in there, Matt?
I don't know. Let me check. I'll add you if you're not there.
Because I'm cheap and I'm ridiculously comprehensive.
It's usually the women I fall in love with. So don't think you're actually on here. What's the website? Because you can do your own little promo on there.
There's no website. Can I just put cjeffs at packdesk.com?
And you wonder why I didn't have you on there.
Yeah, well, I do it. I'm very casual with it. It's not
You do it in a bar.
I do it in a bar. It's true. Although the bar is closed now due to COVID, and it probably won't reopen again. This last time I actually
So
did
how
it in
can
a
somebody
hotel.
across the country do your education program?
Either Zoom or, which I personally think is not spectacular. I personally think you should come here to Jersey and do it in person.
Well, one of these days you want them to fly out to Jersey.
I've had people fly out here from Cali.
Yeah,
What
they
do
did
you
that
guys-
once.
What do you guys think is a decent amount to start with? I know it's like a relative question, right? Because you need to have the education, but just like even
It's a
Kathy-
ridiculously relative question because you never know how much the notes are.
Because
I
for
do.
example, the reason I'm asking is that I have a 6-figure job that I work at right now, but I would really like to get into this industry, and I'm saving up here and there in different aspects of real estate that I do now. But this is really an industry that I would like to get into and understand. I'm like an avid learner. I love to read and do things like this, and I'm good at it. And so I don't know if I like Kathy's way of starting is a little intimidating for me, but obviously it's very entrepreneurial. So I don't mind getting some education, but I noticed that you said like, that's not a lot of money to start with. So I'm just curious, like,
It's
is there
not bad either.
Right.
okay.
It all depends on, first and foremost, what interests you in regards to the note industry. And what I mean by this is there's 3 traditional types of investors, one of which is the yield investor. They want to make as much money as possible, generally as quick as possible. There's the liquidity investor. Everyone's, by the way, a primary and a secondary. The liquidity investor wants to be able to exit in and out of a transaction whenever they really want to. And notes are liquid. They're not the most liquid of assets, but there is a market for them and you can enter and exit whenever you basically want. And the last of which is a safety investor, and that's they want the safest possible investment.
I want to quit.
How would you describe yourself? Like what interests you? Because there's also first mortgages, second mortgages, tax liens, trustee sales or sheriff sales.
Yeah, so I have some familiarity with first liens. I mentored under someone who had bought quite a lot in 2008. I just didn't feel
Who
like
was it?
He bought the company that he bought under was Roy Bar in New York.
Does he have a name?
Oh, Roy Singh.
Roy
I
Singh.
don't think I know.
Sorry, not
Yeah, me either.
quite a lot. He probably bought maybe 20 to 50, but they were a lot of high value properties, right? So he bought them for like 10 cents, 20, 30 cents on the dollar in different areas here that are going for much higher right now at the peak. So that is how I got acquainted with this industry, but he just didn't have a lot of the knowledge that he either shared with us in terms of understanding the court systems, understanding how to analyze it, understanding like even selling them. He just bought them and held them. So, we learned a little bit just like tagging along to the courts and trying to pull investors in, but it wasn't a very comprehensive learning initiative.
Doesn't sound like it, but I know the type of individual that you're referencing. So with this ultimate play, are you looking to acquire real property, either flip them or turn them into rentals? Are you just trying to get residual income from mortgages that pay on a monthly basis?
Yeah, so probably holding properties and then also flipping them. So my dad's a contractor. We've done fix and flip REOs, foreclosures for quite a while. So I understand that aspect of it. Just seems like there's a bigger opportunity in notes. But maybe there isn't. Maybe I just don't know enough that I don't properly understand the risks is what I'm trying to fill that gap. And then
Is your local presence in New Jersey?
New York.
I'm in New York.
Okay. One of the things I would highly recommend for yourself with that strategy is first position liens tend to be a little rough in that range because of the extremely low purchase price. We're talking about most properties within that range are kind of in the Midwest, Rust Belt, Bible Belt, or just about anywhere that includes a belt. And they can take a bucket of money to rehab them to get them in that condition, and you don't have boots on the ground to be able to fix it up. Or have that competitive advantage. So in your very local area, there's a couple people three people I know that do this, and it's almost the entirety of it is the acquisition price. So how it is you can buy property that's drastically under market. You can buy notes, that's absolutely true, but in your specific area of New York and New Jersey, it can take a very long time to foreclose. Even for the small entry level price that you're talking about, 10, 20-ish $1,000, you may very seriously want to look at the tax liens and not necessarily buying the tax certificate and then acquiring the property that way, but look at the tax sales that happened within the past year or two, whatever, couple of years, and just look to see who actually bought the property. Because I understand it's buying the tax lien. There's a redemption period that's involved, and once that redemption period expires, there's a process, but either way, they ultimately end up owning the property. The companies that do that are not in the business of fixing, flipping, and doing everything you're talking about. So again, look at the tax sale results, and they're freely and readily available, especially in New York and New Jersey. See who won it, contact them, and see if they have any properties that they're selling.
Yeah, that's a good strategy. What are your thoughts on seconds? Because I know that you can pick up seconds at smaller amounts. And I do know that a lot of people actually buy notes that aren't local to where they are. It's just about knowing what to look for.
I personally and very strongly believe in I personally and very heavily invest in seconds. And I would normally say if you're interested in notes, seconds are basically the only way to go with the capital requirements that you have. But with that, it would be difficult to buy exclusively within the areas you're referencing. And there definitely can be some great deals, especially in those areas, because so many people are averse to investing in New York and New Jersey for which quite honestly, we own notes in those areas. I will specify that in certain areas we take more risk, in other areas we take less risk because of the possibility of a extended timeline in New York and New Jersey. That's one of the areas I would say we take less risk. But to answer your question, I think they're great. And it's something that if you were looking for basically to make as much money as possible and possibly more passive income, that's absolutely a possibility, especially with seconds. But I would again suggest doing that dry run first, and that is just doing a lot of the research, which is generally freely available. I'm not talking about ordering credit reports and title reports and paying money for this stuff, but just going online, checking the county recorder and seeing what's there and what the documents mean. You don't have to understand almost anything of what goes on in the actual courthouse because you have attorneys that do all that for you. And you just need to know how to ask a question to them and make them explain much of the processes, but also, and more importantly, the timeline of what's involved.
So would you suggest I know you mentioned tax sales locally. What about understanding some of the process, doing a dry run, and then maybe investing in seconds across the country where the values are different, right? They're not as skewed as high. Is that something, or do you only invest locally? You feel like people who are starting, or forget people who are starting.
I invest nationwide, and I am involved in multi-million-dollar purchases. We have a lot of things going on. But I only said locally to you because one, that's what primarily interests you, and that's where your competitive advantage is for rehabbing a property.
I see.
Investing nationwide and in seconds, we're in many scenarios happy to take the property back and done very, very well with that.
Mhm.
But it's not something that always happens. Either we end up settling the loan, they bring it current, or they modify it in some way. But again, the underwriting that takes place will demonstrate the most probable outcome. And that is what's the most likely scenario to happen. And as Kathy pointed out, buying stuff for 70 cents based on all these, years of past due payments, guess what? Not everyone saved their money during that time so that they can just pay you later on,
Yeah.
especially nowadays.
You're right too.
So
If you're interested in like
I-
liquidity, then you'd say, okay, fine, seconds across the country is a good option than not actually holding the property.
liquidity was more just saying like, I have a performing note, I'm going to sell it. I have a non-performing note, I'm going to sell it to somebody else. I'm going to make it their problem, or I'm going to let them make some of the profits. There's a lot of reasons that notes are sold, but notes are great. Like I said, there's a lot of potential in them. The things where you're talking about nationwide investing, again, with only 1025K, you're only going to be able to buy a couple of notes, and that's perfectly fine. You're still doing it with laser focus. But the varying states, the things to take into consideration is the extended timelines that can come into play and the legal costs. It'll be in some of the presentations. I'll put my email there, I'll forward it, but it's understanding the security and the enforceability. And this is what I'm about to say is for first or second mortgages. You should know who holds the senior lien. Why I say even on a first mortgage is because there's always a super lien. Sometimes it's taxes. Actually, it's always property taxes. But you got to double check to make sure there's no other liens there, and there's some nuances where it happens. Your purchase price, which if the seller doesn't tell it to you, then you're determining how much you feel you're willing to pay for the note. The balances, the amounts owed, status of any other liens on the property, the senior mortgage payment, interest rate, estimated rents on the property value, occupancy status. I'm just going fast because I have it written down and we'll make it freely available for everyone. But again, what we're talking about with nationwide investing is the eviction timelines and of course evictions as well. And the last part of which is also the servicing costs. And that is things like Allied servicing charges like $17.50 a month. Madison and FCI for a non-performing note charge like
85,
I don't know
90?
60.
No, it's like
Yeah.
85 or 90.
Yeah, $85 a month. That's
And
a
if
big damn difference.
if somebody's in bankruptcy, FCI charges for that too. I think it's another 85, whereas Madison it's free.
Yeah, either way, it's horrible.
Yeah.
Regardless, we're talking about, if you're talking about some areas that it can take years to foreclose, and I understand things like Florida, hey, you can technically foreclose in like 6 weeks or 6 months or something. It never happens. The average foreclosures there is 2 to 5 years. And that is, if
Very
you have like
expensive.
a $10,000 lien, it's just not worth collecting upon.
I see. That makes sense.
And that's even just the servicing costs alone, let alone legal costs. We had a loan in Oklahoma that was like 10 grand. Our legal costs are more than that at this point. And after the homeowner litigated us and fought us in court, then they wanted to settle, and we had an inability to settle because our legal costs were so high.
Not only that, there's a lot of registration fees in Florida. Registrate the moment you begin a foreclosure in a lot of counties and cities nationwide, you have to register the property, which is basically just a moneymaker for the town, county, or
Which,
state.
by the way, you don't need to know all these things, but I would
No.
recommend just before you buy in a state you're not familiar with,
Check it
just
out.
call up somebody that'll deal with it later on. And what I mean by that is like the foreclosure attorney or trustee, and just ask them, like, is there things I should be aware of that are involved in the state? Because as a foreclosure trustee, we want you to do things correctly. And what I mean by that is if you threaten to break kneecaps, if you send out letters you shouldn't send, or in a manner you shouldn't send them, or to a place you shouldn't send them, whatever, you may get sued later on. And as somebody that's a foreclosure trustee enforcing your creditor rights, that means we get sued too.
Mm.
We'd like you to do things correctly. So just ask questions in advance, and there are answers like, yeah, there's more fees that you didn't know of in the state. Or the individual speaking earlier, Imran, it would have been nice for him to know, oh, I may have to advance money at the time of the trustee sale.
Okay, that makes sense. Thank you.
Well, and not only that, sometimes the lawyer will let you down. Like I had an attorney in Florida who ended up causing me to get $15,000 in fines in Miami by not telling me about the registration. So your attorneys will let you down too. Do your own research as well. But in any event, there's a question going on here. Sarab, or not really a question, but Sarab is saying New York, New Jersey is very expensive from a legal cost perspective. 20 to 30,000 does not give you the ability to have a $3,000 to $4,000 bill run up on legal. Fixing a property is also very expensive and takes a lot of time. Saj will have a better time in Pennsylvania. So there's somebody offering you an additional choice.
Thank you.
I also will say, though, why it is that we do own notes in those areas. While the possibility is there for excessive legal costs, it's amazing the good notes tend to work out quickly regardless of where they're at. And
Yeah.
we bought notes in New York that have plenty of equity, and they'll call us right away and, you know, work out a deal sooner rather than later, because ultimately they're liable for those foreclosure fees and costs, and we can add it to the amounts owed.
But I find it's interesting, and you could tell me if you agree with this too, and Nick can chime in on this. The notes that sometimes you think are the junkiest may turn out to be literally the best note you ever had. And the notes that look like they're stellar and amazing turn out to be the shittiest notes, the most expensive notes you have. So you never really know. Everybody's foreclosing for a different reason, or allowing a foreclosure for a different reason. And so, you know, you can't always tell what a borrower is going to do or how they're going to respond,
gonna
whether
like
they're
my
going to
answer.
fight you or not. The what?
You're not going to like my answer.
Well, go ahead, give it. Let's see.
If the note that you rated the worst turns out to be the best, that's representation of bad underwriting. What should happen is exactly what you think is going to happen. Now, it's fantastic when you mitigate, you know, your understanding of things and how they're going to turn out, and they're better than expected. That's good. But ultimately, the best underwriting predicts exactly what's going to happen.
How could wait, I think I got to take the other side of that, because you can't anticipate what the borrower is going to do. Your underwriting can position your purchase in the best light. You're going to get your equity, you're going to be covered. You're buying a strong note versus a weak note in terms of collectability. But what the borrower is going to end up doing is a total wild card.
Mm-hmm.
You're 100% correct. You're absolutely correct. You can't always predict when somebody's going to fight too hard for nothing. You can't always predict. You can generally predict what's going to happen, but not necessarily when. One of those examples that Kathy is talking about that happened this week, we bought a note for 5 cents on the dollar for a total of about $3,200. And the general information on it, the property was worth about, you know, $375. It's in California. They previously filed Chapter 13 bankruptcy, but it's irrelevant because they didn't complete it and it was dismissed. The first mortgage, we didn't know exactly what was taking place with it, but we knew because we couldn't phone bank it or get any info. But the first mortgage was originally $273, and the second mortgage unpaid balance was, I think it was $64,000. Anyway, we had a sale date on it. Numbers are good. There's no foreclosure action on the first. Homeowner contacted us. and ended up settling for $43,000 and change. Now, again, we bought this for $3,000 and we just settled it at over 40. That's a pretty nice return. There were possibly some other circumstances, but pigs get fed, hogs get slaughtered, and I'm very happy with making 40 grand on this individual note,
Oh, yeah.
only
absolutely.
having spent 3.
Yeah, of course.
Absolutely.
That
But
exceeded my
you have no
expectations.
but you have no idea which borrower on the tape has got that 43,000 sitting around waiting to pay you off.
Yeah, there's ways you can figure a lot of that out, but this is also a recorded conversation online, so you can only go over so many of them.
Yes, bear that in mind. We are streaming. Officially, you're absolutely correct. Except in the event of Pacer. Pacer is a legitimate way to find that stuff out. So do we have, so Allison is asking for your email address, which she gave to him and you gave to her.
And I just put on the Zoom webinar chat.
Okay, good. And you can see it. So, all right, fantastic.
Actually, I don't think panelists and attendees can see it. Maybe only panelists.
Oh, it's mkelly, MKELLEY at specialdefaultservices.com.
I'm going to type it in there. All right, there it is
There,
for everybody.
There we go.
Hey, I have a question, Kathy and the team. During one of our last call, you mentioned about, advising or sending letter to your borrower to do a refinance because of the current low interest rate. So I was thinking, to do something like that, but the borrower, has not paid. It's a non-performing loan. It's not reperforming. It is still non-performing, and then borrower actually a few months ago did ask me, if I could help with refinancing her out, and I didn't have any way of helping her. Can a borrower actually get a loan on a non-performing loan, like to pay the non-performing loan, or how does that work? It doesn't. It hurts her credit. How does that work?
Well, listen, a person could get a loan on anything that's delinquent as long as they're willing to pay the highest interest rate possible. So, but the question of that, the next question is her doing that or him doing that, is that worth their effort to pay you out? And the answer is probably no. So if their credit is that bad, they're probably, whatever interest rate they're going to be able to get a refinancing out, it's not going to be worth their time to pay you off.
I see. Yeah. So really, even though the interest rate is very low, these borrowers really cannot take advantage of those because they have such.
Right. If they're delinquent, they're never going to be able to take advantage of these great rates that are happening right now. People have to be current and in good standing in order to take advantage of these rates that are going on right now.
I see. So could this be an option that, we do a workout where, he or she pays like 6 months of payment and now is a payment record and then go and refi?
Yes, except in your particular case, you're not reporting to the credit bureau, are you?
I'm not.
Then you're not helping her in any way, shape, or form.
Okay. So when are you?
A couple things just to reiterate everything Kathy's saying, because we completely agree on it. The homeowner's most likely not going to qualify because it's, can they refinance advantageously? So when they go to refinance, most institutional lenders would not be able to touch them, or at least for a loan that's better than the one you could give them, quite honestly, because of the delinquency and a myriad of other factors, which is probably including a foreclosure. But they can still get a loan, as Kathy pointed out, that may be from a hard money lender. And we've had recently a homeowner explore this, and most of the time, those hard money lenders will not go above a total of 70% CLTV. Some of them may go as high as 80%. But the reality is, you as a note holding investor, why are you giving up so much equity in the property? Let them sell the house, let them do anything else. And plus, if they're willing to go that route, why the hell aren't they just modifying the loan with you? Because ultimately they'll do whatever makes the most sense. And it's probably going to be you.
Absolutely.
And that is so true. And recently I had a borrower who actually went and got a refinance at a much higher interest rate from a private lender. And I could not understand why, because, she just went dark. I wanted to help her, offer her, I can give her, different loan modification, but she disappeared. And then, we tried to wake her up and started foreclosure with Matt Kelly's team. And then I got a call from a private lender saying, they need a payoff. And so I gave them payoff and I got paid. And then I asked the lender, who are these guys, and this is private lender. And I'm sure the rate was higher, but for whatever reason, that's how it ended up.
You don't know that. It could have been her uncle.
Could be.
It could be a rich uncle Fred, who says, "Hey, I'll lend you 50 grand, pay that guy off." So here is Sarab has some advice. Have them team up with a relative who has good credit. It can be done if the property changes to a TIC. They need to, I'm not sure what that is. They need to become a minority owner, and they then can have a buyback from the relative. Oh, tenants in common. Gotcha.
Yeah, there's a lot of ways to complicate this.
Yep.
Oh, and fun part is, as a lender, none of those things are my problem. It's up to the homeowner to do them, to come up with that, to do whatever it is needs to be doing, because ultimately the homeowner has rights and they can bring the loan current, they can pay it off, and quite honestly, they can do nothing. Anything else is subject to the lender's approval.
So how are you feeling about that? Is that a good answer for you?
Oh, no, definitely. I mean,
spectacularity.
Yeah. And, I want to share some information about attorneys giving advice. I think Raj was asking about this question, and you were saying, don't get advice from attorney. I had my very first pool that I purchased. I had a loan in Florida, and it had a statute of limitation. I was very new. I was very nervous to even talk to an attorney. But then, he sent me bill that he did some research, and he sent me bill for doing research on law. And I'm like, you're a lawyer, you should know this. Why are you billing me for this? But anyway, he came back and said, because of the statute of limitation, this loan is not collectible. And I thought,
great news for you. That's no longer true. In Florida, they had a court ruling, and I believe it's even a published one. And now there effectively is no statute of limitations in the state of Florida.
Spectacular.
Okay. No, so what happened, I talked to somebody and they say, get a different attorney. So I did get a different attorney, and I ended up getting $70,000+ back on that loan. The first attorney said I could not get, and he even said, don't even try, because if they pony up with a good attorney, you are going to be in big trouble. So I fired him, but then when I went through this, I got 70,000. So yeah, a lot of attorneys actually do not know the business.
I have a question for you, Matt. Do you have an attorney in Illinois?
No, I avoid Illinois.
Yeah, me too. But we have these 2 notes that came on a tape, so I'm stuck.
Does happen, but
Ugh.
unfortunately don't have a recommendation for you.
I actually need a good litigation attorney in North Carolina. Do you guys have any recommendation? Not foreclosure,
yeah, give me a minute.
but litigation.
Yeah, I do too, actually. I have to, yeah, hang on.
Because
He'll give you a name. I'll give you a name. You can
Okay.
check him out.
Yeah, we got the foreclosure judgment, and the borrower's attorney is going to the appeal court to appeal against the judgment. So we need some litigation attorney. Matt, you gave me a very good one in Seattle, Washington, a few years ago, and he ended up winning me the case, and I made a trunk load of money on that deal. Thank you so much, Matt.
Always happy to help out.
Yeah, it was the Mike DeLeo in Seattle.
Yep. These are outside legal counsel. We process the foreclosures, and if there's litigation, they're the ones that handle it.
Mm.
So my North Carolina guy is a guy named John Mandaluk.
Mandela, okay.
Yeah.
And his number?
Yeah, hang on just a moment.
Our North Carolina attorneys, let me make sure this is the
Earl
right
Hutchins,
one.
Hutchins Law Firm. It's 910-864-6888.
Okay, great. Hutchinson Law Firm.
Hutchins, just Hutchins.
Hutchins Law Firm.
And the attorney
We
is
use a
John
company.
Go ahead.
The one we use is Brock and Scott. It's BrockandScott, brockandscott.com. They're one of the larger foreclosure attorneys out there. They're very good. And I think they handle multiple states.
And do they do litigation as well besides foreclosure?
Yes, they do.
Okay.
It's a one-stop shop.
Brock
And their website's brockandscott.com.
BROCKANDSCOTT.
SCOTT, brockandscott.com.
.com. Any particular attorney I should talk to?
Anybody's fine, quite honestly.
Okay. Thank you. Thank you, Kathy.
My pleasure.
So are you guys since you're seasoned note investors, I have a question. How do you think like the market will be different, and like let's say when it does crash, is that like a great opportunity for you guys versus the past few years? Has it been difficult to kind of find notes, or do you feel like this is an industry once you're in it, no matter what market it is, you can find opportunities?
So for me, my answer to that question is twofold. I believe there's always opportunities regardless of how the market is. However, it's a question of how plentiful are those opportunities. So I personally think we're in the next year, we're going to see ridiculous inventory. It's going to be great.
I love it when the stock market's high and everything else, because then the homeowners have more money to pay us.
Mm-hmm.
But when those things do transpire far more than they already are, traditionally a lot more mortgages go bad, and ultimately that does result eventually in more notes being made available. It doesn't mean that they're going to trickle down to being listed on like PaperStack and stuff like that, but more notes are sold, and that should mean that the larger companies that are picking up those trades will resell some of them as well. So we are seeing that there'll be a lot more inventory. What I would recommend for a new investor as well is where to find things. Is there's two general approaches, and they're what I'd reference the top-down, bottom-up method. The top-down is signing up for lists, and these can be lists that are hundreds of notes, dozens of notes, whatever the case is, as far upriver as one can possibly do it, whether it be signing up with the FDIC licensed brokers or some of the larger entities that are out there, just to get the list. And once you get that list, of course, it'll be out of your price range, but you might be able to solicit the people that just won that bid, as in the people that won that giant trade, see if they're willing to sell off a small sliver of it to somebody like yourself. We've done very well with this strategy. And to find out who won that bid, all you have to do is ask the broker. They'll probably tell you. And if they're not willing to, then you can wait a couple weeks, if not a month or so, when the assignments record, and then you'll know exactly who won and follow up with them. The other way is the bottom-up approach, and that's going on the note listing websites and just going on there. And once you run title on this or go to the county recorder and look up that property, you'll see all the recorded assignments, which is effectively where that note has been. And to get better pricing, you can certainly do all the calculations you can possibly do, but you can also see where that note has been, because presumably they got it at a better pricing than what it's being sold for now, and see if any of those companies are still in business and still selling notes. And then the other thing to do is, quite honestly, if that company is not in business, look to see who was involved in it and where they're at now, because usually they just go over to another company that's very similar to their old one, just has more inventory and is more active. And the last way that I haven't mentioned yet is conferences. And I'm not talking about the small ones where you go and, shake hands and do things like that, especially in a, global pandemic, but actually get the attendee lists. And that's for the extremely large conferences, preferably. And that'll be in some of the presentations I'll freely share. And the other ones can be the small ones as well, but generally the really big conferences. And all you do is you take time, go through it, eliminate all the vendors, the people that are trying to sell you something like a product, whether it be title reports, tax services, things like that. You're not interested. Put in a separate category investors that are similar to yourself. And what you're looking for is a small group of individuals that are either A, brokers, and I do mean licensed brokers, traditionally by the FINRA, and the next of which is large entities that have the type of product that you're looking for, and then just reach out to them and see if they have anything. And they're probably not going to tell you right off the bat. The best way to start the conversation is usually letting them know what you do and that you're interested with qualifying with them, so that when they do have a release or they do have something that they're selling, that you'll be able to access it. And the ability to qualify tends to be disturbingly easy, even for somebody very new within the industry, and has nothing to do with capital and how much money you have in the bank. Because quite honestly, the last way to impress a bank is saying you have money. They don't care.
That's refreshing to hear. It gives me some hope.
And again, you don't need to go to the conferences, because some of these conferences are very expensive. All you need is the attendee list.
Mm-hmm.
And you can call them up and say, hey, who went last year? I'm thinking about going this year. And you're set. You can call them and say, I'm thinking about going this year. Who's going? Send me a list. And they're probably not going to give you like their name and contact information, but you don't need it anyway. All you need to know is the company, because the person going is not necessarily the right person. So you can always, you just want to get contact with the company and see if they'll direct you over to the appropriate desk, an individual. You can also look them up on LinkedIn and see if they'll respond that way, which is pretty rare because most professionals don't do business on LinkedIn.
Mm-hmm.
But a lot of people disagree with me on that one, but that's okay.
I
What-
don't. I agree wholeheartedly. IMN often will give you the list, but again, it'll just be the company name. You'll have no idea who represented them, and that's fine.
What is generally like the title of the people who are in charge of that desk that would qualify you?
You're not going to know it because it's like 500 different titles.
Okay.
And I'm not exaggerating. There's no commonality with the title. So if you ask for it, it's something like if you're talking about, if you're talking to them, you're not going to be able to call like Wells Fargo and just get directed saying, this is what I do. Can you connect me with that desk? They're not going to do it. You're talking about individual like entities that basically win those FDIC trades and those giant ones that are brokered out that are thousands of notes big. It's kind of those type of companies that sometimes manage millions of dollars worth of assets. Again, you're not looking to buy millions of dollars. They're not looking to sell millions of dollars, but they may sell stuff that's outside of their normal criteria. Or there's a lot of different reasons, quite honestly, but they may sell, they may sell exactly what you're looking for. And like I said, that's one of the large ways we purchase, and we've done very well with it.
Awesome.
But
Thank you.
just, you can call and say what you do and that you buy notes. And if there's somebody involved in their trade desk, on their sales team, on just about anything, and see if they'll connect you to the right people.
Nicky.
I have to say goodnight to you.
I hear you. Keep in touch, brother. And by the
Thank
way,
you.
we found an excellent replacement to Meatballs and Brews, which
Good.
is Elena Forno.
Okay.
Yeah. Oh, and by the way, sorry to interrupt, but I'm just going through a stack of business cards I have from some people. An example, like one of them at Union Bank is the director of institutional markets and real estate industries. Another one at Carrington is managing director. Another one, it's a broker, it's just managing partner. Another one at Citibank is director of agency and trust sales. Another one at Bank of New York Mellon, they have director, or sorry, it's just director. There's another one, global head of business development. Another one at a bank, one of the Bank of America entities is global credit and special situations structured products. Another one at Wells Fargo is managing director of asset-backed finance and corporate debt finance. I mean, it just keeps getting crazier from there. Let's see. I'm just
So
looking for some of the
technically, you
weirder
could
ones.
call yourselves that if you wanted any of those.
Yeah, the one at Wilmington Trust is the vice president of global capital markets. And there's probably like 50 guys with the same title.
And at banks, everybody's a vice president.
Yep.
I was a consultant at a bank for a number of years, and I almost died laughing. Everybody was a vice president. It was hysterical.
I got to tease you, Kathy, and saying just because you told bank people at the bank to F off doesn't make you a consultant.
You are right about that. You are indeed. And I did tell them that actually towards the end.
Know and love you for who you are.
It's actually a bank. It got sucked up by M&T. A small, it was a small bank. It had like 1,500 branches. Oh
yeah, one of the other myths is that banks that are distressed will sell mortgages. That's a lie. Distressed banks can't sell because the second that they do, they're at a loss. They're in the red. It's when a bad bank is absorbed by a good bank, or one of their bad portfolios is transferred over to another good healthy bank, that healthy bank can usually sell it at that point.
Right. In this particular case, this bank is so interesting to me, actually. I learned a lot at this bank. This bank was actually so flush. When it was taken over, M&T actually bought it for free. It basically cost them nothing. They bought it with this other bank's own assets. It was ridiculous. It was so crazy. And believe it or not, it happens. I was like, how are they buying this? And it's basically costing them nothing to acquire this 1,500 branch bank. It was just crazy.
What are your thoughts on commercial notes?
I have bad thoughts about commercial notes.
We've purchased commercial notes in the past, quite a few, and we own more than a few commercial buildings. If you wouldn't mind being more specific with your question.
In terms of what's going to happen with the market in terms of after the pandemic or next year, will there be a lot of notes available? Are they lucrative? Is it a good idea to look at?
Do you want to take this one, Kathy, or do you want me to answer it? I mean, you
can
your
answer
thing.
it because I don't have any happies about commercial. And I also have zero delving into them. They don't make me happy even a little bit. So,
Well, technically I underwrite for a living, so I'm not known for being an optimist. When it comes to commercial notes, there are wide predictions to not have good things happening. And I'll get to the note part of it in a second. Why that is because, I mean, the default rate is well over 30%, especially in many areas on commercial properties. There's just many individuals that have an inability to pay the rents, and as a result, generally even more that have an inability to pay the underlying obligation. And this causes a lot of distress. So when it comes to the commercial notes, because something's in default does not necessarily mean that that note is going to be available for sale, let alone for sale at a discount. There's times in which notes can be sold, which is a little bit of a longer conversation, but it is going to result in a lot more foreclosures. And there's a lot less protections that are going for commercial properties. But we'll see what's going to happen on that. There will be more commercial notes available. Doesn't mean they're a good idea. Some of the things that people, and it's also incredibly difficult to price them currently because they're now, and when I say new's not necessarily good. They're having problems pricing commercial properties because it's usually based on the amount of rents received. And currently, because of the extreme defaults, they're not basing the pricing off of the rents received. They're trying to value the property in completely different ways, coming up with numbers that are not always matching up with investor expectations. So actually just selling commercial properties as a whole right now, prices are down, but they will go down even further because there's so much vacancy in some areas. Like in California, there's, at the very beginning, they were estimating that 12% of brick and mortar buildings that were occupied the businesses would not survive. And there's now people talking that it's 20%. And that would have been unthinkable 2 years ago, that 1 out of 5 businesses that exist in a visible office would be gone.
Yeah.
And with those type of rents, prices are going to go down on values. It does not mean rents are going to go down because the people that are in there, they have an obligation to pay and they really can't afford to lower the price, even though that their building is worth less.
Right. And the same is happening in New York on the East Coast here. I mean, like I said, and Philadelphia, you drive down, Fifth Avenue and it's completely boarded up. And how many of those stores are actually going to come back? 50% of restaurants in New York are never coming back. So, I personally have never been happy with commercials. So that's just my particular take on it. Take what Matt said.
The last thing I'll add with commercial is one of the ways we started out was investing in commercial, and we've done pretty darn well with it. But some of the things to take in consideration with commercial is you can have the best property in the best area and get it for the best price. But if nobody has a use for that property, there's effectively no value for that property because nobody has any use for it. And I have numerous examples of that, some of which we ended up with. And the other one is the options for what will happen within a commercial space tends to be very limited. You're generally not going to get the loan to become current in full. They have problems, and those problems are probably not going to be solved by you. They're in default for a reason. The next of which is bankruptcy is much more common. And you're starting to get in the realm of Chapter 11 bankruptcies, because we're talking about an individual with assets and also business assets. And that's not always a good thing. They just may have a ton of debt. And if it exceeds generally over $750,000, they have to do a Chapter 11, which is a lot more expensive and takes a lot longer. And it can also, taking back a commercial property, which is probably the most common outcome, is sometimes you have to dump just a bucket of cash into it to be able to get it to where somebody can rent it or it's sellable.
Yep, that makes perfect sense.
And like I said, we have numerous examples of all these.
That makes sense. It makes sense. What about RV parks? I've heard some people talking about the RV parks are 100% occupied through next year or several years because of the pandemic. And they're trying to buy RV parks, not mobile home parks, but RV parks.
That's my goal in life, is to live in an RV. I dream small.
We're going to get back to that one, Kathy. You have issues.
Come on now. I love tiny homes, and tiny home on wheels, even better.
Oh, that is so easy to achieve. Why? You can do that after just a year of investing in this stuff. It's not hard to do.
I know.
I
I'm
have
a
to
cheap
agree with
date,
that.
dude. I'm a cheap date. What can I say?
Can I ask one
Painful.
question
Of
to
course.
some of the investors on here about maybe you guys have worked in corporate jobs before. Do you feel like it's a better work-life balance? I mean, obviously it's the more you handle, but I'm just curious, like getting into this industry, I'm looking at it as something long-term. And I do have a corporate job right now that's very stressful and takes a lot of my time and effort, and they do pay really well, but I don't think I want to stay in it. So I'd like to start here and try to build something. Do you have any like advice or thoughts there? Just out of curiosity, no pressure.
Well, I mean, I think we've all worked corporate jobs before. I have. What I can tell you is, in terms of what makes this spectacular, is I can go to Italy, where I have a house, and spend 3 months and still continue to do my job. And do it from Italy, which is spectacular, right? Conversely, I can go down and visit my daughter for a month and do it in Florida. It doesn't really matter. That's the beauty of this. Can't do that in a corporate job, right?
Why the hell do you have a house in Italy, but you want an RV?
Because I'm a simple kind of gal.
It's the same exact thought.
Sorry. I do. I have a great little place in Tuscany.
And you could have a great little place on the corner of anywhere.
Well, that's true, but I love tiny houses, and tiny house on
I'm never going
wheels
to give you.
so
I'm going to
much
keep
better.
giving you shit about that. But to answer the questions, we will get back to the mobile home thing in a second. I'm going to give you shit for a long time on that one, Kathy. You deserve every bit of it. It's done out of kindness and love. It's not a bad thing, but nonetheless. Anyway, you can keep the job. It's not a problem. This actually takes very little time. Just individuals like myself do such quantity that we do it all day long. But it's really not hard. And you can do it in addition to, or even separate than, and slowly build it up. Using your funds or investor capital doesn't really make much of a difference, other than if you use your own money, you tend to make more money and your cost of capital is a lot lower. So yeah, it's just learning. The hardest part is the acquisition, and that's understanding the probabilities that's involved and the most probable outcome, reducing your liability. And if you buy the right note, things tend to work out quickly, and it's not hard once you get it. You just basically, I think it's funny, a lot of people that manage notes, they're basically paid to send me an email to start foreclosure. That's about it. Personally, on notes that I've owned, we've done everything from, sending demand letters dressed up as birthday cards to Christmas cards. We've done the door knockers. We've sent them in FedEx envelopes. We've sent them in weird envelope. I mean, we've sent stuff in every way you can imagine and done things. We have a friend that used to send the burner cell phones, the one
Yep.
like one-time use cell phones, in with a FedEx envelope. And when they get the signature required, they'd call it. They don't do anymore any of that stuff. Not only is it not cost effective, it generally doesn't make much of a difference. It's not about just finally getting this impossible person on the phone, because I don't do a lot of cold calling, because I don't have the urge to call somebody and say, by the way, you owe me a couple $100,000. Let me try to explain that one. No, I'm a secured creditor. It goes one of two ways. Either I get my money or I get the property. And there's legal proceedings. I'm a bank. I'm going to act like one. I'm going to do the least required by law. And that's, I'll send the notices that I'm required to send by law, or have an attorney or the foreclosure trustee send them as we're required to send them by law. And usually I'll have the attorney do it in the state where the note's located, because I don't always claim to be up on every single law in every single state. Know a lot of them, but I'll check beforehand. So usually it's just having a very small network of individuals that can handle the process. Like somebody asked about North Carolina, and I said Brock and Scott. If you buy a North Carolina note, you just give them a call and say, I have this note serviced by this company, and say I want to move forward, and they will. And how it works is they send a demand letter, and if the homeowner will respond, and they don't. And if they don't, the foreclosure moves forward. And if they'll either respond or they don't. And if they don't, you may go forward with a foreclosure sale. And if you get the property back, then you can proceed with evictions. And either they'll want to work something out, before the sheriff throws them out, or the sheriff will throw them out, and you can then sell the property, do whatever you want with it. But in the event that they respond, I only generally have one or two conversations. I only have two general questions. And that's, how am I going to get paid, and how much money how much am I going to get paid, and when am I going to get paid? We'll have the servicer collect all the underlying information and complete all the financial information and present it to us for approval. And then we'll just come up with a plan where they think that's a comfortable amount that they can pay. And it's either a yes or no. It's very simple. Or at least is to me, and I just complicated everything, and I apologize.
No, that was very helpful from both of you. Thank you.
Quite welcome.
Real quick, somebody did ask about mobile home parks.
Yes.
Somebody I know that loves exactly that. His name's Noel Scruggs, NOELSCRUGGS. He has a couple mobile home parks now. Sometimes banks sell notes on them, but not really. Usually the mobile home parks that you're referencing, they're usually not even listed for sale. The most common strategy with that is to run a search, and I'll tell you where in a second, but you can run a search to effectively see mobile home parks that are owned within a given area, and essentially who owns them, and just solicit them to see if they're willing to sell, because some of the times they're just looking to get out of it, or to cash out and do whatever, because they want to join Kathy on the road.
See, they're smart.
I mean, those things can do happen, because a lot of the ones that are, a lot of times they've been owned for years, and sometimes they're just not for sale, and they're in it for the business, and there's nothing you can do about it. But very often, and the place I'd recommend, it's the program's called TitleFlex. It's from a company called DataTree. They have a million different types of products, but TitleFlex is one of their title products. They have a free service, or sorry, a free trial. And some searches cost money, but you can do things, it's called a flex search. And you can type in criteria and get like a whole state, or you can draw a circle on a map, or even type in a city or a zip code. And actually just select the criteria of, I know it's mobile homes, I don't know about mobile home parks. But what I know Knoll does, so you can search that way. But what I know Knoll does is he actually just Google searches and gets all the mobile home parks in a given area. And he tries to find the owners. Then he just calls them up and sends them letters and says, hey, if you want to sell, we're here.
Yeah, there's
And
some
that's all he's
people.
done. It's not complicated.
Sarab is asking, what is the website again?
I'll type it in.
Okay. Yeah, some people like swear by buying these mobile home parks. I mean, unless
It's usually not a plural. It's usually like one person. I only know one person that does it successfully.
it's right. That's what I'm saying. For me, I just don't know that unless you have somebody you completely trust on the ground, you'd probably, have to live there in order to make money on it.
No,
Who
no.
the hell
So
wants
what,
that?
to be honest, the thing is about mobile home parks, why some people like them is because they have, basically they'll buy it for whatever, and contractually they can increase what's effectively the rents for the
Mhm.
tenants that are there by a given amount every year or however often. And they have captive tenants because once the mobile home, as I can jokingly say, you're more knowledgeable than myself at this one. But when you have a mobile home, the thing settles and effectively doesn't move again. It's not
Right.
affixed to the property legally. It's considered a mobile home, but they really can't move it because if they move it, damage happens to it. There's other
Mhm.
problems that occur. Basically, they can't move, and you can keep increasing the rents over and over again over a given period of time. And they really can't do anything about it other than leave. And if they leave, they can't take the mobile home with them.
Yeah, I mean, there's just so many other things that could go wrong, though. I mean, you get somebody, we're talking about trailer park people, so or mobile home people, so that could tend to have a
Hey, they're
certain
your people. Don't knock it. But no,
but I mean,
it's
there's a certain connotation there, and so unless
they're
you're there,
fine. It's just understanding that they're not affixed to the property, so you don't necessarily get the mobile homes that are there. But yeah, it's fine. But I would suggest in that area, just usually most people have a given area that they want. And you can Google search all the mobile home parks in the area, then try to figure out who owns it, how to contact them, whether it be skip tracing them or sending them letters, whatever.
Okay, well,
And it's very targeted marketing, and you'll have more success than if you send out thousands of letters.
what I'm
Most
wanting
people
was
that do
not
well in it, they
market-
just have a good manager in a certain area so that they can do anything within a given area. But it does require the appropriate manager, which is kind of hard to do.
right?
What I was asking about was the RV parks, not mobile homes, not the stationary homes, the actual RVs where you campgrounds, where
Like
you
the place
drive,
I'm gonna live.
where you drive and you camp overnight or a
So that's
week.
a relatively new market, Allison.
Okay,
That
Legally speaking, they're the same thing. So I was referencing the same thing.
right.
okay.
The only thing that's different from the comments that Matt made to what you're saying is that they are obviously way more mobile. They're not a captive audience. But exclusively RV parks is, I think, a relatively new thing given the new market of people living in camper vans and stuff. The tiny house movement, that kind of thing. I think it's relatively new. And so I'm not sure, it is a little bit different, I guess, because they are way more mobile. You can just drive away, unplug and drive away. So they're not a captive audience. So I guess that does change things, but I don't know enough about that to speak on it. But he just gave you some good advice. This guy, what's
Absolutely.
his name? Nick.
Thank you so much.
Matt, what was the guy's name? Nick what?
I'll type it in.
Okay.
It's Noel Scruggs.
Thank
Oh,
you.
no,
He's not
no, I thought you
Good
said Nick.
anymore. He acquired a couple mobile home parks and he's pretty good. He just goes hiking and lives his life, and he's thrilled. He's down to acquire more, but he's not terribly aggressive because his bills are paid for years to come. I have no
Yeah.
idea what his dad's name is.
She wants to know if that's Lonnie's son.
He's down in San Diego, so it's entirely possible.
Oh, well, that's Cheese Hood.
Yeah, it is. I just was curious because Scruggs is a very not a very common name, but Lonnie Scruggs wrote the book called Deals on Wheels, and it's all about mobile homes.
Oh,
so
it's not going to be that then.
okay.
It just, well, that's an awful big coincidence. Two Scruggs in San Diego doing mobile homes.
Noel used to, before Notes, he made his living playing poker professionally, so he's already nuts.
Yeah, well, you gotta love that. Come on now. Well, all right, boys and girls, it is 8:49. We have been at this for almost 2 hours. Does anybody have anything?
Yeah, I do wanted to get some input
Sure.
from Matt. If you were to look at commercial loans, there are some good or bad ones. Which one would you look at, given the opportunity coming, like would you look at hotels or apartments? What type of commercial loan would you consider?
We own a hotel. It's a nightmare. I don't recommend them. There's a lot involved with hotels and they can get very complicated. Stay away from anything where environmental regulations could be problematic. And I'm talking about especially gas stations. Anything that's kind of a strip mall, those are having problems right now. What I would suggest is rather than, because all these things are nice, but it's where you say, well, it depends on the purchase price. No shit. On commercial loans, there's no downriver on them. It's basically bank direct and through very specific brokers. I would start by looking at the FDIC licensed brokers. That's DebtX, Mission Capital, and First Financial Network. Because all the time, it's another company called 10X. That's 10-x.com. It's basically auction.com, but they sell commercial loans, and they have phenomenal due diligence. If you're trying to learn underwriting, it's a great way to go. Is just go to 10X, Mission Capital, and all those places, and get their underwriting and see if you can replicate it yourself. But anyway, just go there and see the type of stuff that's available, the pricing that it goes for, and just see what interests you. That's all there is to it. It's not that one's better than another, because it varies by state, it varies by location. We've done spectacular with commercial. We still own more than a few commercial buildings. And many of them came from notes. Most of our offices in other states came from notes that we purchased, by the way, years ago. But just go and see kind of what's going, and then you look at the pricing and just ask the broker, find out afterwards what the thing ultimately sold for. And like I said, they have all the information there for you. You can, send people out to verify it and stuff, but it's a good way to start is just do the dry run, even with commercial. Just understand that the most probable outcome is you're getting the property back.
Okay. So it's 10X, DebtX, Mission Capital, and what's the other one? You said Global something?
First Financial Network.
First Financial.
Jay is asking to please spell the site.
It's just email me. It's all in the presentations, but
Oh,
And
Jay might not. Let me repost your email. Jay, I'm not sure was here at that time. Jay, did you get Matt's email address? Were you here for that?
No, I didn't.
it's in the webinar chat.
No, well, he wasn't here. Let me see. I think it only picks up from when you first come in.
Correct. Picked up when I first came in.
Hang on just a minute. I will repost it in there. Jay is like, Jay just recently started talking. He's like he's like my special guy.
Writing this.
The what?
I'm writing,
Oh.
typing.
So I typed in a couple of them, deadx.com, ffncorp.com, 10x.com, and missioncap.com. They all sell commercial notes and they're very good. And like I said, it's direct from the FDIC. Yeah, so some of them are fairly low purchase price. I mean, these are not 10 grand notes. Some of them are, I mean, they're not cheap, but they're not, it's about the best pricing you're going to get. Let me see here.
Now, in your hotel, do you license that out to somebody else?
Oh, and
or do you run
sorry,
it-
one other note site as well is realinsight.com for commercial notes.
Matt, for your
Type that in
hotel,
there.
do you license that out or do you run it yourselves or what do you do?
I don't have the time to run stuff post sale. We have a manager that does it.
Right.
And then I also have a partner that I argue with bitterly about it. And he doesn't want to sell anything and I want to sell most things. So sometimes
with
we
you.
agree to disagree and then he gets his way because he put in more capital.
Yeah, I would, I'm with you on that, owning that kind of stuff.
Yeah. So bottom line is it's vacant. And we did we leased it out after a while and they haven't paid rent since April.
Oh, spectacular.
Mhm. And we have to install a sprinkler system that's $50,000.
Oh, even better.
Yeah, and that's in addition to all the stuff we've already done about repiping it, putting in, a ton of stuff into it, carpet, paint, walls, and it's not a small place either. And having to do a hell of a lot of other things.
Yeah, that would be the first thing on my chopping block.
Yeah, and there's also zoning problems with it.
I hate owning all real estate. I hate owning my own house. It's just, yeah, I just, not my thing. Hence why I want to live in an RV. I have a really nice one I picked out.
I'm going to get you a real nice therapist.
Come on now.
Well,
Actually,
you can choose the weather wherever you want to go, right? Just go park in.
exactly.
Yeah.
I do too. It's called
Exactly.
air conditioning.
If I'm in Arizona one week, then I can go up to Vancouver. I can go anywhere I want. Take the Inner Passage up to Alaska. Do anything I want.
Yeah, you don't have to
I
go
do
to
that
a
too.
hotel.
Just fly there and skip all the boring parts.
The what?
I
Well,
do
the
the
inner
same thing. I just fly and skip all the boring parts.
No, the Inner Passage you can't. The Inner Passage is something very special. You have to do it in a vehicle. It's very special. I love those things. Come on, I'm an outdoorsy kind of gal.
That's from Alaska to where?
The Inner Passage is from Alaska to Washington, Oregon. Oregon? I think, yeah, Oregon. No, Washington. What the hell am I saying? And it goes through like via the waterways in BC.
Yeah, and you can be like Shondor Lau and just walk the whole thing because he likes that.
Yeah, no, I have zero desire for that. I have a friend who literally has walked almost every single trail in North America. We call him Heidi because he's like 6'7", and he literally alone has hiked every single trail in North America. And
Cool, but I'm not going to waste anybody else's time. We're going to bullshit. I like catching up. I came on just to listen to stuff while I was doing other projects, but I always
Oh
enjoy the
gosh.
conversation.
Oh, come on.
Any other
now.
note related stuff, happy to answer them. And my email has been posted as well. Let me know.
So I have
All right.
a question. Did anybody have trouble with the PDA like I did? That was sent by email?
The PDA.
No, excuse me, the NDA.
Which NDA?
The one that you sent, Kathy, I believe.
I sent you an NDA?
Uh,
I didn't send you an NDA.
It's from Pack Desk.
Oh, that's an automated thing. If there's trouble with it, there's trouble with the automation.
Oh. So how do we get over that hump?
Well, did you receive the PDF?
I received the attachment, but the PDF would not open. It said it was 0 bits. So it's empty.
Oh, well, that's interesting. Send here, I'm gonna put an email address in here. Send him an email and ask him for a copy.
Okay.
We'll talk later, Kathy.
Yes, sir. I'm so glad you joined. It's been a long time since I heard from you.
Thank you.
Thanks, Matt. All right, so Jay, here's an email address. Send him an email. Tell him you're interested in the NDA and you're having trouble. And he'll send you a new one.
Okay.
Right now we have a couple different things for sale. We have 2 firsts for sale on smaller value properties, and we have a file full of unsecureds for sale.
File of unsecured.
Yeah, the lien is gone.
Okay.
But those are the 2 things we have for sale right at this moment.
All righty.
And we may have more. Who knows? I think we have some performers that may go out. We have some non-performers. I think we have a Georgia, a PA, and a New Jersey non-performer for sale. So I don't know. You have to, the guy that you're going to send the email to, he's the one who's in charge of that kind of thing.
Oh, okay, so he knows what's in the box.
Yep, he's the asset guy.
Okay.
He's our dude for that.
All right. What did you say about Georgia?
I think we have a note for sale there.
Okay.
Are you familiar with Georgia?
Oh yeah. Mm-hmm.
Let's see. This one is in. This one is in Austell, Georgia, which is Cobb County.
Okay. All right, so this is a new platform you started
New platform?
for the sale?
No, we're just. Remember, I told you we generally don't sell a lot.
Right. Uh-huh.
Yeah, so these are just things that we're not really working because they're not really part of our business model, but we
Okay.
have them. If they were part of our business model, we'd be working on them, but they're just not. So we're looking to kind of get rid of them. It's so funny. Allison wrote, "Thanks, Kathy and Matthew," which is kind of funny to me since my ex-husband's name is Matthew. So when I saw it, it took me aback a little bit. I had to go, oh no, she's talking about Matt Kelly. So Allison, that was just very funny. I literally had to do a double take on that.
Oh, that is funny.
Totally. My ex-husband is Matthew, and I was just like, oh my God. I was like, oh, okay. All right, boys and girls, I had a great time tonight.
Thank you, Kathy.
Thank you. You guys have a great rest
Yeah.
of the night. And
Thank you, Kathy. Thank you, everybody. Good night.
thank
Good
you.
night.
Thank you.
All right. Thank you, Kathy.
All right. Have a great night, everyone.
You too.
All right.